Hello to all my friends and my ninja family. I'm Harry Lee. It's great to see you again in this live trading series. Today's session is a bit special and quite different from our usual trades. I'll be using three main indicators. First, the solar wave RK, which helps spot both trend signals and trade entries. Next, we've got the multi-timeframe fusion, an indicator that shows trend agreement across different time frames. And finally, the Captain Optimus Strong system, which I'll be using to enter trades automatically. Before we dive into the action, here's my setup with all three tools. First, let's talk about the solar wave RK. I'm going to tweak a few parameters and adjust how it looks on the chart, just to make the signals more reliable and also to clean up the interface a bit, so there's more space for the other indicators to show clearly. After the adjustments, the chart looks much cleaner and a lot more intuitive. Next, let's move on to the multi-timeframe fusion indicator. With this one, we'll be using the 80-tick and 120-tick timeframes to check for trend alignment. These will help us confirm the direction compared to our main trading chart, which is running on ninzarenko 12.4. And now, we're going to add solar wave RK as the input for the multi-timeframe fusion indicator. Make sure to use the same settings for solar wave RK here as we did on the main chart. This is important to avoid any mismatch or confusion during the trade. Also, don't forget to select the correct encoded signal. We want to use the trend signal so multi-timeframe fusion can read the trend direction properly. Next up, we're going to add the final piece, Captain Optimus Strong. One of the newly updated features I'll be using today is of signal per direction. What exactly this feature does, we'll talk more about that a bit later on. Of course, make sure the settings here are exactly the same as the solar wave RK we added earlier on the chart. Also, an important note, when selecting the encoded signal, be sure to choose the trade signal, since we'll be using it to enter trades based on pullback signals from solar wave RK. Next, let me explain the of signal per direction feature so you can get a clearer idea of how it works. This setting controls how many consecutive buy or sell signals Captain Optimus Strong will take. For example, right now you can see Captain is taking 5 consecutive buy signals. But if you change this setting to 3, then Captain will only take up to 3 buy signals in a row. And here's an important note. Buy signals will only start showing up again after a sell signal appears. So it resets the count when the opposite signal comes in. If you set it back to 5, then Captain will suggest up to 5 signals in the same direction again. In today's trading session, I'm going to try something a little different. Even though we're still using multi-timeframe analysis, I'll be taking trades during both situations. When the timeframes are aligned, overlap, and when they're not. So it's easier for us to compare how things perform in each case. Also, I'll be sticking with just one fixed stop and target, and I won't be doing any extra risk management this time. The idea behind this is to help us see how the results can change depending on whether the timeframes agree or not. And hopefully, it also shows how important it can be for a trader to step in, to make manual adjustments or manage risk, rather than leaving everything fully on autopilot. Our first sell trade turned out to be a winner, a nice and positive start to the session. All right, let's keep going and follow along with the next trades together. In this trade, we came out flat. One contract hit target, the other one got stopped out, so they canceled each other out. Since we set the system to only take 5 consecutive signals in the same direction, it didn't place a trade here. All right, let's keep going and check out the next trades.
Nope.
We've now entered a phase where the market is no longer showing clear trend agreement across time frames. Even so, Captain still went ahead with the trades. And as you can see, this part of the session carries a bit more risk. We had one losing trade earlier, but then followed it up with a winning trade here. So overall, things evened out. We're pretty much back to break even at this point. Up next, the downtrend overlap across multiple timeframes has officially started. This is when different timeframes begin to align in a bearish direction, signaling a clear shift in market momentum. Let's walk through how we trade during this phase.
Nope.
Moving on, during this phase, because we limited same direction signals from the beginning, we avoided overtrading while the market stayed in a long sideways range. Next up, there weren't any trades taken during this phase, so I'll go through it quickly and focus more on the key developments that follow. All right, moving on, here we have another sell trade. And you might have already noticed a familiar pattern. If you've watched some of my previous live trading videos, you'll know that I usually pay close attention to the speed of how candles form to decide when to move the stop loss. For example, after entering a sell trade, if red candles are forming quickly and decisively, I'll leave the stop in place for now. But once the candles start forming more slowly, that's when I start trailing the stop to lock in gains and reduce exposure. In this case, most trades are playing out in a simple 1.1 risk-reward setup, which isn't ideal if we're not actively managing risk. Even if we're up at the moment, a smarter stop management plan could have helped us avoid unnecessary risk. This is a key point in trading. No matter how solid your strategy is, if you're not managing risk proactively, a few losing trades can still hurt your account, especially when you haven't built up profits beforehand. Next up, we had a losing buy trade here. But honestly, if we were only trading during trend overlap phases, we could have skipped this signal altogether. And now we move on to the sell trades taken during the downtrend overlap across multiple time frames. This is where bearish signals become much clearer, thanks to the alignment of trend direction across different charts, giving our trades a higher chance of success. So, looking back at today's session, you can clearly see the difference between trading during a trend alignment across time frames versus trading when the market is out of sync. Most trades taken during non-aligned phases tend to be shaky, kind of a coin toss with one win followed by one loss. They don't generate much profit and often lead to frustration or even drawdown. But when the market is in alignment across multiple time frames, the quality of trades improves significantly. Sure, there are still losses, but the winners tend to be more frequent and much more decisive. One thing to note, we didn't actively manage risk in this session. We just used a fixed ATM strategy. That limited our profit potential a bit. Even so, for an automated session with 20 trades and 40 contracts in total, the outcome is still pretty solid. That wraps up today's live trading session. I hope this concept helps you get a clearer picture of how important trend alignment is and why fixed ATM strategies may not always be the best fit for dynamic market conditions. Join the Hello Win Forum, where ninZaFamily traders come together to explore valuable trading knowledge and products. Click the link in the description to get started. Thanks for watching until the end. If you found this video helpful, don't forget to hit the like button, subscribe to our channel, and ring the bell icon so you don't miss our latest content.